Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has succumbed to much weakness with a combination of the US Federal Reserve's minutes and also the Australian employment data. Starting with the US Federal Reserve's minutes, the data showed that many US Federal Open Market Committee members were unsure about their next move as they continue to see significant upside risks to inflation. While turning to the Australian July employment rate, it came in at 3.7%, just off its near 5-decade lows. However, although that may be appealing to some, the data missed the forecast of 15,000 increase in jobs and instead lost 14,600 according to the Australian Bureau of Statistics. This missed the job rate forecast of 3.6 with the June release at 3.5. So with the numbers, the market is finding the Australian dollar come into much negativity as the prices head lower with the lows posted somewhere around the region that we can see here that was in November 2022. Looking at the technical aspect though, the market is extremely oversold. Although the ADX is trending to a rather strong bear case, I feel that there could be soon a snap back to the upside and therefore moving away from the lows around 63.35 to around 63.60 and head on towards 64.20 and maybe even higher back to around 65 cents. So I'm not a bear down here due to the low oscillator. And also the fact that the dollar index is quite close to its objective, which was at 104, as it now trades roughly around 103.45. Moving on to the euro, the market is still somewhat steady into a bear case as the trend now forms to a stronger case to a level of 108.45. As recently stated, beneath there, I'm not actually much of a bear, and I feel the bullish aspects could return and therefore see the low RSI rebound and could look from away from 107.75.85 and correct itself back to 109. Although I've been holding somewhat a neutral stance when it comes to dollar yen, for those trading I'm still looking towards 148, but I have little merit as the journey will most probably be rather bumpy. Nevertheless, we are seeing an extremely overbought condition and therefore from the RSI does warrant a pullback anywhere towards 145 and reassess from there. Sterling, well, the market was somewhat firmer overnight compared to most of the other currencies as the latest release of the UK July inflation report, or the CPI, dropped to 6.8% year on year, which was seen as a sharp fall from 7.9% gain in June. The decline was certainly welcomed. However, whether this will change the Bank of England's is pretty much uncertain, that is, to keep to a 25 basis point rate hike. Still though, I feel the market has further scope to the upside and could see a rise back to that key level, which is somewhere around 127.80 to 128.20, and a clearance there would give further scope towards 130. The gold outlook still holding to a downtrend, and as we can see, still looking very much to its objective of 1,850. As you can see here from the trend, it's relatively strong, although we are oversold to the RSI. And therefore, the market may pause towards 1,884, but over the next coming days, I still feel there is downside risk, and that is towards that objective of 1,850. Wrap it up with all, the downside call has been reached. That was at $78.8090, as it now trades around $79. I'm not a bear here. I feel the market may actually stage a recovery, possibly back towards $81 to $82 a barrel, and therefore see if this base holds anywhere around $78. Well, that's a wrap. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoy the rest of the day.